the number one best way to build credit. And actually in this video, I'm gonna give you the 3 best ways to build credit. So if you want, you can take one or you can do all 3. But the problem with credit is this: the requirement to build credit is credit. So for example, let's say you got here and you go to college and you get your degree and now you're applying for your first job. The first thing that they're gonna ask you in that interview is, how many years of experience do you actually have? And then you're gonna reply, or you're gonna say, well, I have 0 experience. I have no experience. I just left college. And then they're gonna tell you that, hey, we don't think you're the right fit for this position because we need someone that has at least 2 to 4 years of experience. And then you're thinking, well, how am I going to get this experience if you don't actually hire me for this job because I just left college? So it's kind of like the same thing with credit. If you go and you try to apply for like a car loan, a mortgage, or even a credit card, they're going to tell you that, hey, we're not going to approve you because you don't have any credit. So to get credit, you need credit. So the thing that you're trying to get, you can't get it because you never had it before. So it doesn't really make any sense. And this is why in this video, I'm gonna break down the 3 best ways and also the 3 easiest ways to build credit or to get a good credit score. And this video is going to be for 3 types of people. So number 1, if you need to build credit and you don't know where to get started, then this video is gonna be for you. So stick around to the end. Number 2, if you have a credit score, but it's really poor and you just can't get approved for any credit cards no matter how hard you try, then this video is for you as well, so stick around. And also number 3, if you have a poor credit score and you plan on buying like a house or getting a car or doing anything in around 12 months from now, then this video will help you out as well. Now here's the first way, and actually just before we get into that, just a quick reminder, if you guys are new to the channel, my name is Ian. On this channel I talk about ways to make money, ways to save money, ways to invest your money. I talk about bank accounts, credit cards, just about everything to do with personal finance. So if you like these videos and you like these types of topics, be sure to give this video a thumbs up. I'll really appreciate it. It's 100% free, won't cost you anything. Also, be sure to subscribe with the notifications on. That way you never miss the updates of when I post new videos. And if you guys want to talk to me one-on-one about this topic or just about anything else, you can message me on Instagram. I'm leaving that link down below in the description. But let's get back to the number 1 way to build credit, and this is by getting a credit card. So this is actually the first way. So you can either apply for a regular credit card or a secured credit card, and depending on what your situation is currently, this will help to determine which one you should go for. So for example, if you don't have any credit, then you should go for a secured credit card. Also, if you have a poor credit score and you just aren't able to get approved for any credit cards, then you can also apply for a secured credit card. And I'm actually going to give you guys 2 good examples here. So example number 1 is the Discover It's Secured, and this would be if you don't have any credit and you're just starting out. And then option number 2 would be something like the Open Sky Visa Secured Credit Card, as they will accept just about anybody, even if you have the worst credit score ever. Now, I've already reviewed both these credit cards, so if you want, you can go ahead and watch those individual reviews on this channel. But the main point here is this: with a secured credit card, all you're really doing is the credit card company is taking a deposit from you, and in exchange for that deposit, they'll give you a credit limit on this credit card that is equal to whatever you deposit, and that way you can actually go out here and you can use the secured credit card to build your credit. So for example, just to make sense of this, you could apply for the Discover It's Secured credit card and you could make a deposit of, let's say, $500, and then you have a credit limit of $500, and then you can put one small bill on this credit card every single month, like a Netflix subscription or your Planet Fitness subscription, and then every single month you can pay the small bill of like $10 or $15. You can even use auto pay, and that way you can actually start building your credit up. Now, to be approved for a secured credit card, the only thing that you need is to have a job or some sort of income stream. So even if you have a really poor credit score right now, or you have no credit at all, as long as you have a job where you have some sort of income, then you can get approved for a secured credit card. And even if you apply and you're automatically declined or denied, you can simply just call up that credit card company and you can say, hey, I want this secured credit card. I don't have a credit score. My credit score is poor, but I have the deposit to make on the credit card. I'm also working at Burger King and I make $21 an hour, so I have stable income, and usually you will be approved. So that's the first way and also the easiest way to build credit. Now, the second way that you can build credit is like a fancier method, and this is by using a credit builder account. So for example, Chime has a credit builder account, Self has a credit builder account, or Self Lender, and also I reviewed these individually. So if you want to see the individual reviews so you can see like the pros and cons of each, then you can go and watch those videos. But these credit builder accounts are kind of like loans, but they're not really loans. And what they do is they will allow you to start a CD that acts as a loan. So for example, you will open a credit builder account and let's say it's for $500. Now, instead of them actually giving you a loan of $500 and asking you to pay it back, what they'll do is they'll open a CD or a certificate of deposit where you don't have access to that money, and then they'll actually treat this like a loan and allow you to make payments every single month of like $10 or $20, and you keep paying this over a period of like 1 to 3 years, and they report the payments on your credit like a loan. So every single month you make the payment of, let's say, $10 to $30, and the payment actually goes into the CD, and it actually gets reported on your credit, and that builds your credit up. And at the end of the term of this credit builder account, you can actually get the money from the CD. So it's kind of like you're saving money, but each month while you save this money is actually being reported on your credit as a payment, and this way you get to build your credit. Now, the only downside to this is that it's gonna cost you. They're not actually doing this for free. So there's going to be a fee up front and probably like a percentage. So you're actually paying them for the service. And this is why getting a secured credit card is the #1 best way. But this falls in at #2 because it still helps you to build your credit, but you're going to have to actually pay them for the service. Again, if you want to do this, you can do like Self, previously known as Self Lender. You can try like Chime with their credit builder account, but this is another option. Also, with this option, it doesn't really matter what your credit score is. If you have no credit or you have a really poor credit score, it really doesn't matter. You can do this and this will still boost your credit up. Now let's move on to #3, and the third easiest method to build your credit is by using your bank account, and this is kind of like a credit builder account, but instead here you're actually taking out a real loan. So there are 2 ways to pull this off, and depending on your credit or if you have any credit in the first place, that will determine which one you should do. So for example, if you already have a credit score, then you can simply just go to like your bank and apply for a personal loan. And it doesn't have to be a personal loan of a lot of money. It could be a personal loan of like $500. And then you can stretch the payments over 2 years and pay like $10 to $30 every single month, and pay this over like 2 to 3 years. And then these payments will get reported to your credit every single month, and this will help to build your credit. Now, the downside here is that this is actually a loan, so you'll be paying interest on this loan. However, if you have no credit or you have like a really bad credit score and you kind of get approved for a regular personal loan, then what you could do is you could go to your bank and you could make a deposit of, let's say, $500, and then you could put that deposit into a CD, and then since that money is there and it's locked away and you don't have access to it, then you can ask the bank to loan you $500, or maybe even less. You can ask them to loan you like $300, or give you a personal loan of $300 using that CD of $500 as collateral. So in this scenario, they won't care about your credit score, because if you decide not to pay the loan back, or if you can't pay the loan back, then they have the CD and they can take the money from it. So it really doesn't matter if you have a really poor credit score. You can have no credit, they won't care. And that's one way to get around doing it. And this way, every single month, you can make the payments on this personal loan and it gets reported on your credit. At the end of the day, you have a really good credit score, or you build a really good credit score. You'll also get the money back from this CD. Now, the downside here is that this is still a loan, so it will come with interest or fees, but the smaller the loan, the smaller the fees and interest will be. So again, you don't have to take out a loan for like thousands of dollars. You can take out a personal loan for like $100 or $200. It really doesn't matter the amount. The only thing that matters is that you're paying this loan off over a period of at least 1 year, and that way you can have at least 12 positive payments going on your credit report, and then you can go ahead and you can also stretch this out over like 2 years or even longer. So these are the 3 best ways to build credit. Number 1, you can get a secured credit card, or you can get even a regular credit card. Number 2, you can sign up for a credit builder account. And then number 3, you can use your bank account and a personal loan from your bank. So I hope this video helps you out to build your credit without having you pay for any expensive credit building services. And with that said, all the best with your credit, and I'll see you guys tomorrow in the next one.